Entrepreneurs. My name is Jeffrey Davis. Again, we are in the Money Matters Radio Network studios. I want to remind everybody to keep watching our Facebook site at Radio Entrepreneurs, and our website. Lucia Russo is working on all the launching of our new sites coming in December, so you got to keep your eye on the ball. Today, for my guest hosts, I have Gary Fatigue. Sorry, Gary, I was having a little blackout
I
there.
can see that.
Yeah, I can
you know, it's a long break you took.
Well, you know,
the holiday break, you just seem to...
No, it's me. It's not the holiday break. It's really more me. I've been known to call my kids by my dog's name and call my dogs my kid's name.
That too.
It's just it's a spatial thing that goes on with it, or a conceptual thing that goes on in my head. It's just, you know, I call grapefruits pineapples. But we do have somebody as a guest who's a lot more intelligent than I am, and I'll let you introduce her.
I think so. Emily Lord from Watermill Group. Emily, welcome.
Hi, thanks for having me.
You want to tell us a little bit about what you do, what Watermill does, and what you do for them?
Sure. Watermill Group we're a middle market private equity firm based in Lexington. We've been around for about 30 years now. It was started back in 1978 by Steve Carroll and his two brothers and his father. They sort of bootstrapping industrial and distribution type companies. And it eventually morphed into, it was originally called the HMK. Eventually they broke it off into their own investment groups, and Steve's portion morphed into Watermill Ventures, now called Watermill Group. And we sort of stuck to our history and still invest in manufacturing companies, value-added distribution companies, all over the U.S. and into Canada.
Interesting. And what are you doing for them?
So I do mostly deal origination, which means that I'm out there looking for companies to buy. A lot of it is relationship management, so most of the companies that we're looking for, which are greater than 40 million in revenues, are now represented by intermediaries, investment banks, brokers when they're for sale. So we basically need to know who all those intermediaries and brokers are and get to know them and get on their radar screens and try to find companies that fit our criteria. So that's one of my functions, and then I also take the first pass at a lot of the companies that come through and try to figure out if it's a good deal for us to do.
So how do you generate your leads?
We use a couple different groups, so I go to a lot of ACG, which is Association for Corporate Growth.
Right.
And they have it here in Boston and then all over the country. So building relationships with investment bankers, lawyers, due diligence people, and then also, you know, meeting with companies individually. And so going to a lot of conferences, things like that. And then just getting out there and talking to people. You really never know where your next deal can come from.
Yeah, that's right.
And how did you get into this business? What's your background?
So I wouldn't say it's the straightest way to get into private equity, but I went to Middlebury College and then worked in New York for a few years.
Nice campus, isn't it?
Yes, it's beautiful. Lots of skiing and snow up there. So. And then I moved to New York and I worked for Forbes magazine for a few years in their conference and events group. And then I took a brief foray to work for the USGA because I love playing golf, and quickly realized that I liked playing golf but not actually working for other people playing golf. And
it's not the same, is it?
Definitely not the same. So then I met someone who has actually started up a healthcare IT company, decided I need to work for them. So I worked for them for 2 years, and the company, I wouldn't say it tanked, but it never actually got off the ground. So that's when I decided to go back to business school, and I went to Babson thinking I was going to start my own company. Quickly realized that I did not, have something I was so passionate about that I wanted to eat, sleep, and breathe it 24/7. And I took an M&A class and loved it. And so then eventually,
with whom?
It was with. I'm totally blanking on his name.
It's okay. I do that all the time. That's how we started this interview. It's all right.
Put me on the spot here. No, so I took an M&A class, loved it, and then I actually met with Steve Carroll, who's a friend of my uncle, and looking for people to network with in the Boston area, and they had a job opening at Watermill, and I guess I fit the profile.
One thing led to another. So, what would be a perfect company for you for you people to work with?
So we're somewhat of a generalist in terms of the industry that we look for. So we like a lot of manufacturing, value-added distribution type companies, but within that, we're really looking for a company that has strategic dimension. And so what I mean by that is not something that's a one-trick pony. So if it's a company that has very few capabilities, they can make one product, they're selling to one end market, and there's not really much you can do, to affect where it's going. That's not something that might be a good fit for us. So a lot a lot of our partners come from an operating background, so they've run, different companies in a variety of industries, and we really like to get our hands dirty, and that's what's interesting to us. So if we can find a company that, the operations, they need some sort of operating changes, operating help, they, might be producing something that goes into one end market, and we can see that it could potentially go into different end markets.
Sure.
That's something that's more of interest to us, where we can really, affect the change of the company.
So what's your typical hold time of an investment?
It depends, probably 4 to 7 years, I would say.
Mm-hmm.
So we're a little bit different from typical private equity funds in that we don't actually have a fund. So we're not tied to the typical fund dynamics of needing to either invest the money quickly or exit companies at a certain time. So each of our deals is separate. We have a group of investors who invest with us on a deal-by-deal basis. So once we find an investment, we go out to our investors, and then we can hold it as long as sort of 7 years, I would say. I mean, at some point we
Do you ever have to do recruiting as well?
Recruiting for
companies that are in your portfolio?
You mean in terms of recruiting for CEOs,
leadership positions,
CFOs?
right?
We do. So a lot of the companies that we look at are actually in some sort of turnaround situation. Some companies we buy out of bankruptcy. Some are running fairly well but need some sort of strategic or capital to take them to the next level and really capitalize on some bigger opportunities. And so if it's a turnaround situation where the current management team has been what's taken them sort of down that path, we'll want to replace them.
Mm-hmm.
We often replace a CFO, someone who can work with private equity groups or sort of knows how that works. So we do sometimes bring in new management and supplement them with advisors and other people who can really help them get to the next level.
So typically is the exit strategy, as in most PE, to take them public, or not necessarily so?
Not necessarily.
Just sell it, flip it after a few years.
I wouldn't say that's exactly our strategy to flip it. We actually haven't taken any companies public. We were in the Latrobe Steel was one of our biggest investments that we've done, and we were in the process of taking that public when we ended up selling it to Carpenter Technologies. That was earlier this year. But a lot of them, we sold some to other private equity firms, and we sold some to strategics. So that seems to be sort of how
strategic buyers.
Yeah, strategic buyers.
So how many people are in the firm today?
We have, I think, 12 total. That includes, there's 6 partners, and some of them are operating partners and sort of part-time who come on, and each deal that we do needs one of those partners to take it on and be the lead for that deal. And they used to go in and sometimes be the interim CEO or something like that, and now they go in and act as an advisor,
like a board
sit on
member.
the board. Yep, and Steve Carroll sits on the board of all of our companies, and so they'll go in and act as an advisor and support for the management team.
Interesting. Have you noticed any difference in the types of deals that are available over the last 2 or 3 years?
We have. I've been at Watermill for 2 years, so I can sort of speak to the last 2 years there, and you definitely see a shift in the types of companies that are coming around. So last year we saw a lot of auto-related deals coming in, auto aftermarket companies, and I think that's sort of after the downturn. They had about a year of good sort of returns on their books, so they were looking to sell. We haven't seen as many of those this year, but now we started to see a lot of pet product companies, which was sort of interesting. We've seen a lot of agribusiness. It is. We don't play in that space very much, and a lot of, if it's a really hot industry, the valuations tend to be pretty high.
Sure.
Excuse me. But yeah, we've seen a lot of agribusiness deals happening this year. So yeah, there's definitely sort of a change and a shift. And actually earlier this summer, there were, people were sort of worried, I think, about the coming tax sort of issues, and so earlier this summer there was a huge deal flow increase, and we saw tons of deals coming through because people are wanting to sell by the end of the year. And now we've seen a sort of pretty dramatic slowdown, and hopefully that picks up next year with more.
Depending on what
companies.
the new
yes,
tax
that's
laws
true.
are.
Well, it looks like that's right.
We all have to know.
Yeah.
I had the same thing yesterday. Someone was asking me about a donation. I said, well, it all depends if you're going to have a tax deduction for it or not next year.
That's true. There's a lot of uncertainty out there, and I think a lot of people were looking to sell, and now people are thinking, well, if I sell and get $30 million for my company, where am I going to invest that now anyway? So now they might think that holding on to the company is actually better. And
what do you like best about this type of business that you're in?
You learn something new every day. I really love, you're learning about a different industry, you're learning about a different end market, you're learning about a different company, you're learning how things work, and you know, it's just, you learn so much, and you have to know a little bit about everything, and it's pretty interesting. So, you know, you also see a lot of companies that are doing very good things in private equity, so I think sometimes it can get a bad rap, and people think that you go in and you flip the company and, you know, fire a bunch of people and try
just
to
cannibalize it and
exactly
suck it dry.
Exactly, and we've had a few experiences where we actually go in and you know, you're taking a company out of that would otherwise go out of business,
Sure.
and saving it, and you know, not everybody will make it through, but you know, you're saving a certain number of jobs in a company
Right.
and helping it grow sustainably. So
You guys
kind of
looking at
exciting.
Hostess Twinkies? I mean, we don't want them to go out of business, really, right?
And Wonder Bread. I don't think anybody should say Wonder Bread.
No, I don't think so. The Twinkies.
Twinkies
you know?
maybe, but not
I did
Wonder
actually
Bread.
agree that there's a lot of interest in
Yeah,
in that
Well, when
company.
you
so.
think that they do, you know, $2 billion in sales, you know, there's a
It's-
market.
that's
Yeah.
a labor
Right.
issue.
Yeah, that's right.
That's a pure labor issue.
Yeah,
And the
So-
government tried to get involved because they got, you know, supported by labor.
right,
Yeah.
But, you know, if you're still not going to get a good deal,
right.
they
It's
don't want to
still-
sell.
Yeah, that's right. It's
They're
not
sick
bad.
of labor.
Yeah.
I've seen that a lot, especially in the food and distribution business. They get tired of the unions, and they get tired of dealing with the labor issues. They want to build a business, and they almost feel like the union's working against them. It's a problem. You need to work together. I'm not against unions. I understand them in concept, but you need to work together.
Yeah, it's true. And we've seen that a lot, and you know, unions you can have really good unions to work with, and they can, if you have a good relationship with them, it can be very beneficial, but it can be really tough as
Well,
well.
conceptually, it's good conceptually on paper.
Yeah.
But it gets twisted, and sometimes the agendas become different than the agenda of the business, and you can't ever lose sight of what you need to do, and that is you got to keep the cash cow going.
Right.
Exactly.
You know, you've been doing this for a few years now. Do you give anybody advice about, you know, career advice about choosing this type of career? Because you've been around now and you've done a few different things.
It's true. I mean, I think this is a great industry to be in, and Watermill is sort of a smaller private equity firm, which suits my personality, and I think it's a great way to get involved in many parts of the business. So, I mean, I guess it depends on what kinds of things you're looking for, but I think the smaller firms, you really get to wear many different hats, and you know, I get to go to the factories and sort of watch, you know, all the products being made and meet with the management teams, and so you really get to sort of see all different aspects of the business, which is great. And I think if you're working for a bigger firm, you can be in that role, but you can be more pigeonholed into certain smaller areas. So working at a smaller private equity firm is
Well, Gary and I both
really great
understand. We both
experience.
roll up our sleeves and get involved with
Yeah,
businesses. So
it's
we know.
great.
But do you get involved with the client as much as you get involved with the whole deal flow?
To a certain extent. So during the due diligence process, I'm pretty involved, especially at the beginning, and then I pass it off, especially the financial modeling part, which I wouldn't say is my area of expertise, to Matt Bergen, who's one of my colleagues, and he sort of takes it the rest of the way through the due diligence process. But you know, definitely up front, get to work with the portfolio companies, and it's great.
Somebody's got to play golf with them too.
Yes.
If I had to do financial modeling, I'd have Gary do
That's
it for
true.
me too, and I wouldn't do it also. Emily, if somebody wanted to contact you, learn more about Watermill Group, how would they contact you?
They could definitely email me. My email is elord, ELORD, @watermill.com. Or, yeah.
My name is Jeffrey Davis. I'm here with Gary Fatigue. We just interviewed Emily Lord from the Watermill Group. We hope you come back again, maybe talk about one of your deals, and we can learn more about what you do, the mechanics of it. This is Radio Entrepreneurs. We'll be right back after this break with more stories.
That was great.